AML Conversations. I'm John Byrne. With me today, Graham Peachey and Tivon Sterin. Both of these individuals have worked on a recent report last November that we want to shine a light on because we believe it's not just relevant to the AML, CTF sanctions community, but something that probably doesn't get enough play. So this is a FATF-OECD joint report. The title is The Misuse of Citizenship and Residency by Investment Programs. Let me just start off before we dive right into it. As you look at the executive summary, I have to admit, as somebody who's been involved in AML-related topics for quite a number of years, I was really not aware, at least generally, in how these programs work. But in the executive summary, I'll just read from it, quoting, each year, tens of thousands of people around the world become new citizens or permanent residents of countries in which they were not born by virtue of investing in those countries. Citizenship and residency by investment, CBI, RBI. These programs are government-administered programs, and again, going back to the report, can benefit both the host countries, spurs economic growth, expanding foreign investment channels, and it does benefit wealthy individuals by allowing them to gain citizenship or residency and the associated additional rights by expediting or bypassing the normal, more lengthy migration processes. So with this, as you can, just from my description, you can say, if you're an AML professional, you're thinking, okay, sounds interesting. What are the challenges? What are the gaps? So again, with me, Graham and Tivon, really appreciate the time. Let's dive right into it. Can you further expand on the description of those programs? And then I want to talk about what are the differences between the two, and then generally speaking, the amount of countries and jurisdictions that afford these individuals these opportunities. And then, of course, we want to talk about the challenges. We want to talk about what you would recommend. The report goes into detail there because, again, this is an area of coverage that I think is woefully lacking, at least from our perspective, not from yours. And so let's dive right into it. So open it up, gentlemen. Go ahead.
Thanks, John. Yeah, thank you for having us. It's a pleasure to be here. So just to take a step back, I think to provide your listeners some context. If you'll recall, back in February 2022, Russia launched this brutal and unprovoked war against Ukraine, and so in April of that year, the finance ministers of FATF member countries called for FATF to do more work to look at some issues relating to anti-corruption that's facilitating both, that war and then also like broader anti-corruption priority issues. And so following that call, the US and the UK co-led a project team at FATF along with the OECD to examine sort of illicit finance risks related with the programs that you were just talking about. So just to provide you some numbers about the project team, there were more than 20 FATF Global Network members and observers, including many jurisdictions that had or have CBI or RBI programs that were members of this project team. The project team analyzed the sector. We convened experts from around the global network to discuss risks at a FATF joint experts meeting. We consulted a variety of stakeholders at FATF's Private Sector Consultative Forum, and the result was this report, which you mentioned, that's published in late 2023. That analyzed the risks, took stock of potential mitigation measures, things like that. So to get to your question, what are these programs? Well, first of all, every program is different. And just to key you in, the report doesn't intentionally describe or analyze specific programs. It's not meant to risk rank programs that exist at the time the report was published. It's meant to provide a guide for governments and the private sector in where the risks are in this space. But these programs generally, they exist for governments to attract foreign investment. They exist to bring in highly skilled investors and to generate, significant funds of foreign direct investment to increase GDP. The IMF noted that more than a third in some countries' cases, more than a third of the country's GDP can come from these programs. Yeah. So they can be quite significant for countries. But generally, they're government-run programs. They provide residency or citizenship in exchange for a wide range of financial investments that we can get into in a bit. These immigration statuses can come with a visa if you're applying for residency, or a passport if you go through a citizenship program. And I'll pass it over to Graham to talk a little bit about the differences, the key differences between these types of programs.
Yeah, and Graham, tell us who are the users? Tell us who specifically are the categories of users when you describe this.
Yeah, definitely. So there's a variety of users for residency and citizenship by investment, and indeed there's a whole industry around kind of finding the program for you, as it were, and we can get on to some of the challenges around that wider industry in a bit. But in terms of residency by investment, this tends to be much more focused around people picking a country that they actually want to physically be in, and so the risks are much more around. For the country, at least, is around that person coming to your country and becoming, for want of a better word, your problem. So if they're a financial criminal, they're going to be doing financial criminal activity in your country. Citizenship by investment is a little bit different. In that you get a passport directly once the process of application has gone through, rather than getting a visa where you have the right to reside in that country but you're not yet a national. You go straight to the nationality stage, and that comes with a much quicker route to a new identity document, and that particularly sort of raises some questions around the risk of creating a new identity that can be used for financial purposes as well as for global mobility purposes. And the other really critical thing about citizenship by investment rather than residency by investment is, more often than not, and we really are talking more often than not, it's very much the exception to the rule, would that person actually necessarily travel to the country issuing them the document? So a lot of the time it's about accessing third countries. So they'll be coming from one country and going to another country with that document, rather than to the country issuing them that document. So from sort of an international perspective, that causes all sorts of problems around kind of the offending might not necessarily be in the country that's issuing that document. So how do you make sure that you know what is being done in the name of your country once you've issued that document? So there's definitely some wider challenges around that sort of citizenship element versus residency. But that's not to say that there aren't distinct financial crime risks within residency by investment as well, particularly around fraudulent investments, and also people stashing themselves, acquiring property, family members into jurisdictions where they can evade law enforcement. So it's not like residency by investment is risk-free at all either.
Tell us about how are service providers relevant here? And then tagging on to that, one of the issues besides money laundering is, of course, corruption. Anytime you have governments running programs, there's always the potential for corruption, no matter what the jurisdiction is. To your guys' point, we're not talking about specific areas, but just in general that can happen. So sort of two questions. How do service providers, how are they relevant in this process, and what's sort of the due diligence, if any? And then how is corruption enabled? Maybe not by the service providers or maybe by them, but just in general because of the way these programs can be abused.
Yeah, shall I take first stab at that, Tivon? Yeah, so I mean, there's a variety of ways that you can get corruption occurring within these programs. Indeed, the risk is very much 360 in that perspective, and the role of the professional service providers can be varied depending on what the risk is. So, for example, they might be acting for a corrupt individual, in which case one of the advantages that particularly international marketing agents can have is they're often pretty loosely, if at all, regulated depending on the jurisdiction they're operating in. And they can therefore act as a gatekeeper to introduce you to vulnerabilities within the regulated system. So they may not be themselves regulated, but the people they're introducing you to, they might know who won't ask you many questions. And so they will act as that kind of gatekeeper into your system, and they will identify the weak points outside of your regulatory environment's ability to see, oh yeah, actually that third party is facilitating all these really bad people into our system. And so that can cause some challenges. And so in that respect, you've got the sort of provision of services to corrupt individuals, but equally, when you're looking at property development, when you're looking at financial institutions, there may be vulnerabilities within what's going on there that is in itself corrupt. So, for example, I might have got access via a corrupt relationship with the government to run a property development. I might simply misappropriate all the funds, and so rather than necessarily corruption, it might be fraud, but equally that fraud might be being facilitated by corrupt contacts. And then you've got the risk of corruption within the program's operation. So criminal elements going to a vetting department in a citizenship by investment unit, for example, and saying, if you don't do the right checks, I'll pay you some money. So you've always got to have that sort of eye out for integrity risk for professionals working in this space.
Yeah, I would just add on, in terms of your prior question, John, like who are using these programs? What kinds of people? All kinds. Not every applicant to a CBI or an RBI program is a criminal, right? There's people who are motivated by humanitarian concerns or security concerns. People who want to have an ease of travel, or who want to have a better quality of life, or want to move, for example, their family into a nicer country or with more benefits, and they want to have like a nice house, and want to get their kids into a school in a better jurisdiction or something like that, right? And so there are plenty of legitimate reasons that you might go through this, but what we're concerned about, I think, and Graham kind of hit on this, is threat actors. People who are seeking citizenship or residency to disguise the proceeds of their past crime, to launder their funds, or people like corrupt actors who are trying to move funds from one place to another to shield their assets, and we can get into that, or to use potentially a new identity to facilitate further crimes. That is something that we have seen. And on the other side, I think, as Graham kind of mentioned, there are threat actors applying for the program, but also threat actors within the ecosystem of investment migration generally. Graham hit on committing frauds, perpetuating corrupt activity. These are all issues that we're trying to draw attention to with the report.
Well, toward the end of our conversation, I do want to get your take on how financial institutions can better improve their due diligence in this space. But I thought it would make sense first. There's a couple of case studies in there that, if you wouldn't mind just giving us high level, and then because giving folks examples, I think, is super helpful, right? And then there are a couple of phrases or terms in the report I want to pin down and ask you about. But just in general, maybe give us one or two high level case studies and how this has worked to move illicit funds or to move corrupt activities.
Sure. So I can talk about a couple. I think some of the most important ones are in the second section of the report, which has to do with illicit finance vulnerabilities, and this section specifically on challenges and consequences. And Graham can get into more of the identity laundering space, because he's right, certainly the expert on this. But I wanted to flag two case studies, one from Portugal, who notably runs a residency by investment program, and one from Cyprus, who ran a citizenship by investment program for a long time. And both of these, and we got a ton of cases from around the global network, specifically on this typology, but I just want to highlight it and kind of hammer it home. The titles of both of the cases are similar. It's the use of alternative passports to circumvent customer due diligence measures. And essentially what we're talking about is someone is coming from one country, and when they represent themselves to a financial institution to go through like the normal, KYC procedures, they use a passport from a country that's not where they're from, gained through a citizenship by investment program. And as a result, the financial institution might not make an accurate risk determination about this customer. And we had lots and lots of case studies that represented that typology. So I wanted to highlight that one. I pass it over to Graham if there's one that he would like to highlight as well.
Yeah, Graham. So there's a phrase in there that I admit I was not aware of: identity laundering. So talk to us about that.
Definitely. Well, I mean, identity laundering, it's interesting really actually, in that identity laundering often works much the same way as money laundering, but facilitates money laundering as well. So with identity laundering, what you will often find, for example, is that people will, in much the same way that you would with money laundering, you find the weak point. So you'll find the weakest program out there, you'll target that. Maybe you'll use fake paperwork for a new identity that if it was a more capable program, they might have found this out, but you attack that weak point with the fake paperwork. You get a legitimate identity with that fake paperwork, and then you go to the next program along, maybe one that's a bit more reputable, and you go, right, this is now my identity. I would like to have a citizenship or a residency with you guys, and so you move further and further along the sort of the chain, gradually building this more credible identity behind you, or you may even create multiple identities, which just causes confusion about, well, who is this guy? So it's not unusual for people who are going down this road to have multiple documents, to have 2-3 passports, and maybe also some residency by investment visas. And so what you quite often will see, a bad actor might, and indeed the legitimate actors do this as well. They'll go for a readily and easily available citizenship by investment from a country that they don't want to live in, and they'll use that document to apply for a residency by investment in a country that they do. And they will wait 5 years, if necessary, to get that citizenship. But some of these criminal actors are playing a long game, and they've backstopped their risk early doors. They've got their QuickTime passport, and they can afford to wait on the residency by investment to try and translate that into an even more credible citizenship. So people really do play the game, as it were. They will find different programs and exploit it for its own different weaknesses and attributes.
And John, as you can imagine, just to build on that, to think a little bit about the challenges, you can imagine, asset recovery is a huge issue at FATF right now. This has the ability to really frustrate those efforts. International coordination and cooperation on extradition and recovery of assets is extremely complicated. And to have someone who has multiple identities and can enter and exit jurisdictions under different names, hold assets under different names, can cause a big problem for investigative and operational authorities. So just wanted to highlight that.
I think that's probably also worth pointing out. I mean, we have a section on vast virtual assets. If you think about the way virtual assets work, in some ways they're quite anonymous, but in other ways they're not. So you can follow the blockchain, to which it is quite helpful if you're a criminal actor to have a legal alternative identity to have opened your account with, and to ultimately do your onboarding and offboarding of your assets through that exchange, that can't actually be readily established. That's definitely the same person as this other person. So you can see sort of areas like that where these kind of alternative identities really make it quite difficult to pin down who you are and where you are, versus the more traditional ways of banking, through your I am a Brit or I am an American, that you would normally think of.
So two things strike me. One is obviously the governments need to get a better handle in some of these jurisdictions to oversee this. You talk in the report about continuous monitoring, but to grab to your point, you say if they're in this, criminals in this for the long haul, that must be a little difficult. So I'm going to go to the government first, then I'm going to go to the financial institution second. So how do you ensure that? And you also talk about multi-layered due diligence in the report. So give us a sense of what you all have recommended governments do to bolster the oversight of these programs, given what you've said, multiple identities, all the things that, as I'm listening to it going, this would take a lot of resources and a lot of training, it seems to me. So let's talk first about how the governments can improve their oversight. And then obviously we want to give our listeners the views regarding the role of the private sector, role of financial institutions. So talk about what you recommend governments do that perhaps they're not doing, or how they can, enhance their oversight.
Yeah, sure. So there's a few things worth keeping in mind here. The first is that a lot of these documents are insurance policies, and a lot of the criminality behind it is slow burn criminality. It's your complex frauds, your Ponzi schemes. So yes, upfront due diligence really, really important. But at the time you do that due diligence, the crime may not be established yet, right? So there may be nothing to find. You're not going to break a Ponzi scheme that's not been detected by a country's own regulatory capabilities with, a couple of weeks of doing some checks or a couple of months of doing some checks. So that sort of, yes, do the upfront due diligence. It needs to be robust. A lot of countries use fairly robust private sector companies to go out and do this for them. Equally, other countries will use their law enforcement capabilities, depending on their reach and the capabilities of that law enforcement within the due diligence space. But that can't be the be all and end all of it. You have to do the continuous monitoring, and we really do recommend in the report that countries think about that continuous monitoring. And that applies for both citizenship and residency by investment. So for residency by investment, you often get more bites of the cherry because they'll be extending their visa or applying for settlement or applying for the citizenship at the end. So there's often 2 or 3 obvious points where you can go and really look at that individual. And the advantage that residency by investment has is that those people, generally speaking, are creating a financial footprint in your country. So there are more tools and opportunities to go, oh, hang on a minute, this person's been doing some really funny things. They've got a salary of, maybe it's 100 grand a year, but they bought a 30 million pound house. How are they doing this? Where's that extra money coming from, etc. But if you're citizenship by investment, you don't have those immediate opportunities, but you do still need to be paying attention to what's going on. A lot of these countries will be using the due diligence firms, the sort of private sector due diligence firms, to do that for them, and that will take various forms, but most of these will have, in the same way that they will provide these similar services for the financial sector, ongoing monitoring tools that are often quite heavily automated, that can raise flags. Now, what countries need to be thinking about is, okay, how can we retrieve these documents if it all goes wrong? What is our ability to take away these documents? Often, it has to be said, there is a risk of granting in haste and repenting at leisure. You really do need to be thinking about, what is our backup plan here if it goes wrong with certain individuals, and having a clear plan in place is what are the thresholds? When can we withdraw these documents? What is the legal hook that we use for that? So yeah, that's kind of some of the key things that we really sort of draw out here. But yeah, is there anything you want to add, Tivon?
Yeah, I would just add, I think we're not necessarily, and the report doesn't advocate countries expending a massive amount of resources on, enhancing their capabilities to detect this specific issue. I think the report is meant to draw awareness to the topic and say, like, to the extent that you're already investigating this, here's another aspect of financial crime that you need to consider when you're, thinking about opening one of these programs, or if you already have one open and you're, increasing resources for law enforcement generally, this is something that you need to be thinking about. I don't think the report really advocates for a large expenditure of extra resources in that regard, though.
Yeah.
What's your experience with terms of the financial sector? Are these potential scams, whatever you want to call them, more relevant for larger institutions that cater to private wealth clients? So I'm trying to get a sense of scope. So like a community bank in the U.S., most likely, while everybody should be aware, most likely that's not where the target's going to be. And I know that you also mentioned in the report that there's a negative impact on correspondent banking. So talk, and obviously, Graham, finish your thought. I'm sorry to interrupt, but then talk about the financial institutions, sort of the scope there, because part of awareness is, not everything impacts all institutions. Not to say that they shouldn't be aware that these things occur, but if you got to make a decision on resources in terms of your training, you can do awareness, you can do a deep dive, but is it more relevant to the larger institutions? And then what's the impact correspondent banking? But Graham, I'll go to you first because you had a thought and I interrupted. Go ahead.
Yeah, no, definitely. I mean, one of the things that I would just sort of say is that obviously this is a long-term commitment when you are creating somebody a citizen of your country, or indeed when you're giving them residency, because ultimately they're on a path that may well lead to citizenship, and the risk will be there for life, and indeed their children may inherit. So it can go beyond that if you're talking about beneficiaries of criminal wealth. It's really one of those things where it's much better to do your checks up front. Yes, do the monitoring, but just be aware that taking an overly generous approach may create for you some quite definite challenges, and those people will ultimately go on to represent your country. So particularly if you're a small country with a small population, you can quite quickly end up with people who don't necessarily represent your country's risk profile, representing what your country's risk profile is to everybody else. So that's quite an interesting one. I think that affects the kind of the correspondent banking element a fair bit, because banks are looking at some of these passports going, well, I never really see any of these guys and they're actually representing a person from that country. So why am I treating them from a risk perspective as being from that country? So that can be quite a sort of challenge, I think, for the industry in terms of, well, what's that balance if you're, particularly if you're operating a program at scale. So yeah, I definitely sort of just draw attention to that. In terms of financial sector risk, I think one of the things that we never really see discussed publicly is kind of applicants as victims. So a lot of the focus is on kind of the oligarch types that get these documents, look at the yacht, all of that kind of thing. One of the things you kind of got to realize is a lot of the people using these programs are moving from very different business environments to their new business environment. And they're not necessarily professional investors. It's kind of one of the big sort of misnomers, really. Some of these people are, wealthy, but they're not necessarily mega wealthy, particularly at the more legitimate end of the spectrum. You talk about sort of the successful dentist or what have you, who's got maybe £500,000 or £1 million in the bank and is looking to retire through one of these programs. If you're coming from a country which has gone through, there's plenty of countries in sort of the emerging economies where you've seen 10% growth, and you go to the UK, or you're not to the UK anymore because we closed our program down, but you go to another sort of European economy or US economy, and somebody says, I've got a program for you, it'll return you 10% a year. If you're a Brit national or an American national getting offered that deal, you go, 10% guaranteed returns, that sounds a bit like a scam. But if you've come from a country where actually that's been the norm for the last few years, maybe it doesn't sound so implausible. And so these people, they can often be quite vulnerable to scam activity. And we definitely see one of the core tensions, and there's been some really good academic work that's been done in this space in the past, where companies that need to use a visa or a passport to raise money, there might be a reason why legitimate normal investors who would just be investing for a financial return are not doing that investment, and why these people who are raising money this way are needing to lean into visas and passports. It takes away that kind of normal commercial rationale. Now, no longer is it a case of, will I make money from this program? It's, can I get a visa or a passport through this program? And that can kind of really distort the logic, but it equally opens people up a lot more to these frauds. And so, yeah, you quite often find that actually some of these property development opportunities are either just straight up rip-offs or they're Ponzi schemes. And lightning has struck this industry so many times in that regard that I think it would be remiss of us not to say, actually, something's going on here. And countries are starting to take more steps to protect their programs from these frauds. So we're seeing the use of escrow accounts, for example, in the Caribbean, and much more being done in Europe as well, around kind of thinking about, well, how are we managing where this money is going to. It definitely was one of the things that kept me up awake at night when I was looking after the UK's equivalent of one of these programs. Was not just where's the money coming from, but where's it going to. And there's also a risk, and we draw this out in the report. You've got these transnational flows of funds going through these programs into projects. If the project itself is run by a malign entity, they might be using that as a justification to hide other criminal asset flows. So just be mindful if you are banking a property development or companies that are raising funds through these programs, kind of, is all the money definitely coming from that? And is there the potential that it's mixing with other money from other places? And this is actually a legitimizing story for why you've got large quantities of cross-border transactions going through your account.
Just to pick up one right where Graham was kind of leaving off there. Again, I just want to stress that these aren't, we're not suggesting or making changes to the FATF standards.
Right.
But John, you're asking about, recommendations for financial institutions. What can they do? I think for me, there's kind of two big ones. One is, and the OECD has a larger recommendation on this, but generally going over processes related to customers from jurisdictions that may have, they're coming from a high-risk CBI program. Maybe it would be helpful to assess, do some additional scrutiny on your customers, not just the applicants, but also are you banking service providers? Are you banking a marketing agent, or are you banking like an authorized immigration authority or immigration agent from one of these CBI programs? Because those are two different things and they have different implications. So definitely doing some additional due diligence on any customers that are kind of related to CBI programs is one. Checking for PEPs that have IDs that don't match the country from which they are a political person. And then also I would say including in suspicious transaction reports, any information you glean about if there's a suspicious activity and it's related to a CBI program, include that, because I think financial intelligence units will find that information helpful. As SARs in the US, STRs around the world kind of help investigative authorities look further into these programs.
Yeah, go ahead. Sorry.
And,
go ahead.
and on that point, Tivon, as well, a lot of countries, well, I say a lot of countries, a few programs are still allowing changes of identity during the application process. But what they are generally doing now is putting alternative aliases into the remarks page of the passport. Now, if you're a bank, then obviously what you need to be thinking about at that stage is not just swiping the passport and using your system's reading of the machine readable zone at the bottom of the passport to run your automated due diligence checks and your sort of KYC and onboarding, but also make sure you are recording that remarks page and that you're manually checking any alternative identities that are held on that remarks page, because if you don't do that, actually you're probably missing the most important identity associated to that individual for your KYC.
Gentlemen, again, the report, Misuse of Citizenship and Residency by Investment Programs, a joint FATF-OECD report. Tivon and Grant, I want to give you last thoughts, takeaways before we close down this conversation. It's really been enlightening. I really appreciate your time. Tivon, I'll start with you.
Yeah, so look, I think a lot of the points that are most important for this report we've hit on. I just wanted to highlight again that the financial institutions need to be aware that these programs exist. I don't want to be the person who comes on a podcast and says, read my report. But there are a lot of suggestions, mitigation measures and good practices in the report that we didn't have a chance to hit. But high level, I think the most important thing is that financial institutions are aware these programs exist, that they do a review of their programs and procedures and their clients to make sure that they're risk ranking their clients and customers appropriately, because it would be unfortunate to be missing something from one of these from one of these CBI or RBI programs. It can be very helpful, I think, for financial institutions.
Definitely. I think from my perspective, in terms of the products that are being sold, if you're a correspondent bank, make sure you understand where that product keeps its brain. What is it? How does it actually work? If you don't understand how a product works, make sure you do before you extend any services to that function. Make sure you know all the identities of the individual that is applying for a bank account with you. So ask them, have you got more passports? Don't just assume they've only got one. They might have three. I think beyond that, just also be aware of little things like We didn't really get a chance to mention it, but transliteration within a document, so people changing S's to Z's. If you've got near misses, just think about, has that just changed slightly as they've gone through that program? Do I need to be worried about this hit or that hit in a way that maybe I wouldn't if they were just on one conventional document? But yeah, I think that's kind of the main things really. It's just that making sure you know what the identity is of the person that you're dealing with, and make sure you understand any products that they are involved with that come through the RBI and CBI programs. And if you don't, take the time to understand it before you do touch it.
No, obviously, it's a 60-page report, so I agree with both of you. You need to read the recommendations, the premise, and all that. One additional last question, and maybe it's not answerable at this point. When FATF and OECD do reports like this, is there an expectation, or does it that there'll be updates from time to time? I mean, maybe that's unanswerable at this point, but an issue like this, where I won't say for the first time, but you're making folks aware of something that maybe a good portion of the community didn't have the detail that it has now. Would it make sense? And maybe this depends on the plenary sessions and all that. So just high level, is this something that will continue to be reviewed, or does it depend on cases? Just give us a sense of that, because obviously read this report. We want people to be aware. We want people to stay engaged, but how can they stay current on this? What's your recommendations on that, Tivon?
Sure. So next steps, one, I would say the OECD has been doing work on this for years.
Okay.
They've been looking at it not just from a corruption and program integrity angle, but also from migration, tax governance issues.
Sure.
And so I would say they've been looking at it for a while. For FATF, we're making countries around the world aware of these programs now. There are no current planned future actions at this point, but that's not to say that as we continue to monitor risk, that it won't warrant an update or other types of changes later on. That's not sort of the focus of the report and the project team at this point. It's kind of the report is out, and we encourage people to go and read it, and we will continue to monitor the risks. And if we need to reevaluate down the road, then that's potentially could happen, but at this point, not in the cards.
Sure, it makes sense. I just thought I would just ask that some might be, but OECD doing a lot of work in this space, that obviously is something that's good recommendation. Gentlemen, thank you so much for your time. Again, the report, Misuse of Citizenship and Residency by Investment Programs, available on the OECD and the FATF websites. Thanks so much for your time. Really, really appreciate it.
Thanks for having us.
Yes, thank you very much. Take care.